Hello and welcome to Simply inTAXicating. At its 27th meeting, the GST Council finally brought down the curtain over the much speculated GST return format. It's going to be a monthly one-page return, but how simple it's going to be, we will hear it in a few minutes from the horse's mouth. That the GST Council also decided to take over the GST network. 100% equity is going to be in the hands of the Government of India. That is to be later divided between the states and the center. That formula will be worked out later. The two most sensitive and controversial issues of imposition of sugar cess and incentivizing digital payment have been referred to two different groups of ministers. We will see that in 15 days time, the GOM is going to submit the report. We will see how it transpires and what kind of mechanism the committee is going to suggest to the GST Council for mobilizing additional resources in case of contingency, as the Indian Finance Minister talked about it yesterday. We have four distinguished experts with us. We have Mr. M K Sinha, the GST Commissioner, the CBIC, Ministry of Finance, and who played a very critical role in designing and simplifying the one-page GSTR return. We have Mr. Singh, Senior Vice President, GST Network. We have Mr. Neeraj Bhagat, Chartered Accountant, Neeraj Bhagat Company. I have a knowledge partner also. And we have Mr. Sant Kumar Verama, the country head, taxation, customs, Schneider Electric. So let me start with, let's hear from the horse's mouth first, that how simple is going to be this GSTR, the new format for common SSCs.
The new format will be a normal GST or VAT return which will capture all the outward supplies, and on the basis of invoices uploaded by the seller, the credit will get taken. That's the simple design. Now if you see the SSC base, fairly large percentage of taxpayers have this kind of behavior wherein they take credit on the goods which they have purchased and they pay output liability on the goods they have sold. And most of the sale also is intrastate B2C. So very large part of the SSC base will have a very simple return. Now to say that for everyone it will be a one-page return may not be correct, because the law itself provides for very many different types of situations: reverse charge, ISD, services, deemed export, supplies to SEZ, receipt from SEZ. So if somebody has a large business operation which involves all kinds of supplies which are possible within GST, the return will be slightly different, but such organizations generally have a large compliance team as well. The trouble invariably is visited upon small taxpayers. So small taxpayers and MSMEs will be taken care of in the return design.
So you're saying that there would be two different kinds of forms. One form which will take care of the small taxpayers, another will of course be a little more complicated depending upon the complicated nature of the business, etc., which large businesses normally have.
No, I am not saying that there will be two forms. I am not going to get into the details because there are various techniques available to ensure that the forms collapse according to your need. How we will collapse the form according to the need of individual taxpayer or a group of taxpayer is a design issue which has still not been thought through. And simply put, I can say that I may show you only those tables which are relevant to you. That itself is a huge simplification. So to say one page, you see, that's speaking in the parlance of a hard copy of return. On IT platform, returns don't work like one page, half page, or etc. What is relevant to you should be what you have to fill, and it should be user friendly. It should prompt you to fill it correctly. It should do checks on the fly, and it should be easy to use. That's all.
Right. So Neeraj, you have any query with respect to this input tax credit, etc., and the provisional credit which the new return will have?
You see, the provisional credit, for the first 6 months, it's a welcome step. And post 6 months, they say that, there would be matching of the invoices with that, if there's a matching, then only you will get a credit. Now the question arises, suppose some of the vendors, they just file the return and, they move away. Now in the proposed law, they say that, ultimately the buyer would have to pay the taxes on that. Now question is that suppose somebody is a bona fide buyer, and he has done the due diligence, and suppose 2 months, 3 months down the line they file for a bankruptcy, and ultimately he has paid the taxes, and again the government comes back to them that the seller has not paid the taxes, now you pay the taxes. So that has to be looked into consideration. And in the earlier VAT regime, that never was the case. If you are a bona fide buyer, then definitely you get the credit and the government recovers from the seller. So
But
that's
is it going to be a little larger issue in terms of that there will be a huge number of such cases, etc., or a handful of cases?
there would be a handful of cases.
Handful of cases,
Handful of
perhaps.
cases.
It may
Well,
not
let me react to that one.
Yes, please.
In VAT laws, this was not the position universally. In fairly large number of VAT laws, reversal of credit if the tax is not paid was an accepted principle. GST law also in no uncertain terms in section 16 says that. This has been litigated right up to Supreme Court.
Yes.
And even in relation to Gujarat and Maharashtra Mahalakshmi case, courts have held the position that credit is of taxes paid. So if the taxes are not paid, your presumption that your credit is a legitimate right is all right. We understand that this is a pass-through tax and you have paid the consideration, so you have a legitimate right on that. But revenue also has a few rights. Government can't be giving credit for taxes not paid as an open tap of credit without any checks and balances. So it's the issue raised by him is essentially of checks and balances as to what are the situations in which the reversal of credit from the buyer will take place. Some situations have been given. A company going in bankruptcy is a situation which he has flagged. We will see as to what is when the detailing of law happens, as to what is the best course of action which will stand judicial scrutiny.
Right. Yeah, Sanjay. You have
I'll make an opening comment first that we have been hearing about this for last, I think 2-3 months in the last 1 or 2 meetings that the simplification will happen. So at least we have a roadmap now. And this roadmap looks good, that these 3 returns will get folded into one. And I think it's also on the predicted lines that you upload your line-wise data, invoice-wise data. And that becomes the backbone for the buyer or the receiver to take the credit. Conceptually looks good. I think it will be good to comment when we see these formats in the utility up and running, that how it's going to work and what checks and balances government wants to put in there. And would there be any irritants for the business community? I think we'll figure that out at that point in time. But conceptually, this looks good at this stage.
So this provisional credit for 6 months is a little comforting.
I would say, if I stick to this principle that unless tax is paid, credit should not be denied, I'm perfectly fine with that principle. So this principle has to be embedded somewhere. And if 6 months window is given, to me it looks good, it looks okay. And as Mrs. Sinha is also explaining that the reason or there will be very small list of instances where government will chase receiver for reversal. It will be good to what that list would be. But it's not going to be a broad-based general list. It's going to be a very small exception list where businesses close or no. I think those kind of cases. So I think it will be good to see what kind of amendments come through in the Act to really.
Actually, you see, that's a point which has been unnecessarily labored a lot. If you see the old methodology which was provided in GST, the first point of reaction was to reverse the credit. And then to recover from the seller, and if the seller pays, then allow the recredit.
Right.
This sequence of event has been changed, and that actually addresses most of the concern of the trade, because trade was concerned that as a sovereign you are in a position to recover from the seller, so why are you troubling me? So now the first reaction of the government in the new law, the new framework which has been designed, is that the recovery will be attempted and made from the seller. Now most of the cases, sellers are present. They simply have not paid the tax. The limited small number of situations wherein the seller has not paid, has disappeared, is a missing dealer, those kind of situations are exceptions. So those exceptions trade can also negotiate very easily by entering into contracts with assured suppliers. So there is a certain amount of due diligence which I expect from the trade also while they are entering into supply contracts.
Right, exactly. So Sasiji, from your perspective, what sort of challenge do you visualize now? I mean, of course, the things will be transpiring later on, what all this form is going to contain in terms of the volume of information which is going to be uploaded by the taxpayers. But from technology perspective, and you have gone through the experience, the way the entire economy, the large corporates small corporates, traders, small SSs, individuals. In fact, even now, for instance, cancellation of registration itself continues to be a battle which has to be fought. So, looking at all this perspective, now this GST Council had decided to simplify it. Of course, the simplification the whole economy was looking forward to. But from technology perspective, what is the challenge which we are looking at?
Actually, if you look at the journey that we have had so far in GST, see, the original law, the GST law that was framed was an outcome of the experience which the states had in VAT, because many of the states were having invoice-wise upload of data and both purchase and sales. Now, what had happened that people had encountered wide misuse of credit. People were taking credit on which tax was not paid to the government. So this bitter experience got incorporated in the laws in the sense that to prevent this carousel fraud, missing trader, this what you call bill trading, and this is prevalent in all VAT regimes throughout the world. So in our law, what we took the position was that the supplier will upload the invoices, the buyer will verify and then take credit. This was the premise on which the original law was drafted. What the authorities thought that since we have been allowing the taxpayer to claim credit on the basis of the invoices, we shall continue to give this facility to them.
Right.
But as the things have panned out, now the ecosystem is ready where the taxpayers now know that if the supplier has not uploaded the invoice, which they are seeing in GSTR 2A, then they will not be entitled to credit. Right. And technologically, what in law what we had provided was a very logical arrangement, but it was very difficult to implement that technologically, the back and forth, to and fro, where the recipient was allowed amendment and then uploading of invoice, and then the seller was asked to accept them and then pay the liability. That appeared to be very logical but very difficult to implement, both from the perspective of technology system and also for the taxpayers to comply, but because that required coming to the portal several times. So now, keeping in mind all these problems which we encountered, both GST system and the taxpayers, certain simplifications have got incorporated. Right. One is that there will be unidirectional flow.
Right.
Now these recipients won't be allowed to upload invoices or make any corrections. Only the supplier's invoice, they can take credit only on the basis of supplier's invoice that has been uploaded.
Right.
So this makes life smooth both for the taxpayer and from technological perspective also, for the system also.
Right.
Next is that automatic reversal has been done away with, because in many cases what was happening was that people were uploading invoices or filing return after 2 months. Earlier law envisaged that the credit would get reversed and then the liability along with interest would get posted, and when the supplier was again paying tax, then this would get reversed along with the interest which was earlier charged, which was very complicated from system perspective. So now things are fairly simple. The only thing is that to a great extent the insecurities have been addressed, that of missing traders and suppliers who are not without assets. So the mechanism will kick in promptly and you will have adjudication proceedings against such people. And in case they are bona malified taxpayer, then the recipient will have to pay tax. But how these things will get incorporated in law in a consistent manner will be, we have to see, because and what I want to emphasize that in this simplification, the technology people were also involved. The Infosys team, Nandan's team was also contributed in giving shape to these recommendations. So technologically it will be possible to implement it quickly and smoothly. That's what all of us.
So you think the 6 months period is good enough?
6 months period is good enough, and I think the ecosystem is also now fairly ready. Where matching tools are now there, so people will be able to accept these uploaded invoices.
I want to add only one point from the business point of view, that payment is one part. If the supplier doesn't pay within 6 months, no, you have to reverse. Until such time it is provisional. But if supplier makes a mistake in uploading, I think we need to take care of that aspect also. And this is very common.
Very common.
Especially if you're dealing with MSME sector.
Right.
Not every company can have a robust compliance system or employ people to do all of this. So if you're depending on some external consultants, and there could be a number of reasons for mistakes.
So maybe there will be some utility to take care of the corrections like this. If there is some error which crops up.
I think sir will can tell more how are we going to handle the amendments or revisions. Yes. Presently, amendments are taking place at invoice level in the next sub period.
Correct.
Now there is a view that they should allow revision of the period for which the return was earlier filed.
Yes.
We have to see how this can be handled technologically, because what is happening is the problem is we are not having revision is that the invoices are getting accepted. And earlier the reversal was taking place within 1 month. But now since the reversal is not taking place, we can have a modification of the accepted invoice also.
Correct.
And
correct.
We can see how these.
But how serious was this problem of reversal of credit, Neeraj ji?
You see, it's not very common, but with some cases, it happens. And suppose sometimes the reversal has to happen not because only of the ignorance of the buyer, because sometimes there is an approval process in place. And suppose we get an invoice from a customer, and there is a complete 3 months approval process. So that is why if suppose managers and all that they don't approve it in 2 or 3 months, then also I can't get a invoice uploaded. So they should be allowed a window for at least a revision, maybe a 3 months window or a 6 months, or maybe whatever is the time period that they want to decide. But there should be a window to allow the revision.
So Sanjay, you have some experience.
There are genuine commercial disputes between the parties. So you need to factor that also in the whole process. So if first upload becomes Brahmavakya, how do you deal with that? If it is cast in stone, how do you handle it?
Absolutely. But how gigantic is the size of this reversal? How much credit, being denied or through the process of reversal? I mean, is it significant or it's
I think, from the experience, bad experience is significant. I think number of people were engaged in fraud, and all over the world these frauds are there. Basically, to control these frauds, we have this mechanism of verification, because there are always criminal people in a system.
Correct.
Who form a gang and open up dummy firms and then provide bills and then run away after, say, building up liability of.
That will remain. That will remain. Even in income tax, we have accommodation entries, etc.
And there is a very important proposal this time.
Here also, what if you see in this proposal is that we are going to develop analytics capability to identify such fraudulent people very early and take action against them.
Yes.
That is one of the supplier side control. That one of the points that has
and you have proposed that they won't be allowed to upload the invoices. So that's a very good proposal.
I think Mr. Sinha would like to probably make a few statements here. The concern which we have. Ultimately these concerns address the revenue issues only. The whole issue. So this new format where the reversal thing is done away with, the industry and trade will be very happy. Automatic reversal.
Please understand, automatic reversal has been done away with.
Right.
Government has not committed itself anywhere to say that there would be no situations where the credit will not be reversed. There can be connivance, there can be very many other situations.
Right.
The effort would be to control credit flow from the supplier side, and in exceptions go to the buyer, subject to the condition that the buyer has paid the consideration. Very many times I find that the buyers raise the bogey that why should credit be denied to them when they have not even paid the consideration. So quite clearly they have no bona fides there.
Right.
So if they have received the goods, the invoices are there, consideration has been paid, and it was a clean arm's distance transaction, those will be the situations where perhaps the law will also evolve over a period of time, because there are no easy answers, because that's a very difficult area to enter into. But at present, all I will say is that that's a very small area. Let us at present be focused on ensuring that most of the people have an easy return and an easy experience. And trade also by and by gets used to the idea of dealing with trusted suppliers. That should address most of the problems.
So maybe Neeraj ji, in fact, the council yesterday, out of the 4 issues, there was one issue to levy sugar cess. So let's not discuss sugar cess. What is important is from industry perspective, from taxpayers perspective is that the group of minister has been constituted now. The names have been already finalized.
Correct.
And the mandate which has been given to the group of minister is to work out a mechanism, come up with some kind of measures and the instruments to mobilize additional resources in case of contingencies. Contingencies cannot be ruled out.
Correct.
It can happen today, it can happen tomorrow. So do you think that for raising additional resources, the GST law should be meddled with, or the government should really go for, or bring back the service tax days again in GST and levy cesses? How do you look at this situation?
You see, additional revenue by targeting with a particular industry, that doesn't goes very well with the industry. So, the government says that the production cost is on higher side, and when they sell the sugar, that the revenue they get is on the lesser side. But that's targeting a particular industry that doesn't go very well with the industry. And over a period of time, when the industry, they get the comments from the industry that, why you have targeted only. So that doesn't go very well, and, it should be avoided. So government should look for different avenues to raise the target, but should not look for a GST as a target to garner additional revenue. That doesn't.
Sanjay, how do you look at it? How is it?
I will, since we are talking about sugar shares, I worked with a company where sugar was hugely consumed.
Okay.
What I recall, my discussion in those days, that it's an industry which is highly over-regulated. Yes. You have state government poking their nose, you have union government inside the game, and it's very, very politically sensitive industry. And the political milestones keep changing every 3-4 years while managing this industry. And this causes a lot of repercussion in the way of introduction of cess or doing something else. So that's one comment I have. Second is, just 10 months back we all discussed, and we have been discussing this for more than a year before, that all the cesses will be subsumed and all the surcharges and everything will be subsumed, and we'll have a simple rate. I don't think we should bring it back. Government should find other ways to generate revenue. We should not disturb the structure of GST. That's my view.
Right. I should not go to the council, because the council's
I'm
views
not
are,
in council.
the government side, of course. But even then, as
First, the legal point: can cess be levied? The answer is a clear no. Clear yes. I'm sorry. Yes. The answer is a clear yes, in as much that after all compensation cess is being levied. So GST process does allow levy of cess. But there is a general discipline which has been accepted both by center and states, that cess is something which we will avoid. The present debate is what are the contingencies in which you will use cess as a mechanism. At present there are no clear answers. It is the GOM where the honorable ministers will apply themselves and perhaps come up with a set of situations where cess can be used as a mechanism. Legally it is tenable.
Right. So, fine.
I think that's clear.
Leave it aside. Yeah, okay. The GOM will come up with, basket of solutions. We will look at that. But another interesting proposal was that to incentivize digital payment, whether the GST should be used as a tool. Any tax law for that matter should be used as a tool. Do you think that this is a desirable step for any country or for any system to tinker with
as a citizen? So I'll not wear hat of tax expert of a company here. As a citizen of the country, we all know that evasion is quite rampant, and there's a very high proportion of tax evasion in our country. So to bring that culture that you broaden the base and people pay more, if this is introduced, I think I don't mind this getting introduced. So I'm sure government would have done some homework, some analysis behind this in terms of what it would give them. And even if it is done on an experimental basis, I think it's worth experimenting in my views.
Okay. Neeraj, how do you look at it from professional perspective? The kind of tinkering which will be required to do.
You see, it's good for the economy. From the government's perspective, it's good. Because there is a cap of 100 rupees only. So they reduce the rate by 2% if the rates are more than 3%. So the rate there is a cap of only 100 rupees. So that will have a more compliance, and the consumers will also be they will also go for a purchasing digitally and all that. Yeah. So that's a government motto to have a more digital payment, so that all the heavy purchases, they can be tracked and they can recover through income tax also. Because a lot of players in market who don't buy and who buy in cash to avoid the taxes. So government, because that 2% tax saving and government giving 100 rupees, so they will know the tax evaders, they will be able to track them also. So it's a good thing.
So maybe SB Singh probably will tell us a little more about it, I mean, how do you look at this from the system perspective? If this kind of features to be added,
it depends on the GOM is going to decide how are you going to compute this relief. Because in income tax, they have given a percentage relief.
Right.
So if you apply that in GST regime, that is going to complicate the matter significantly. Because he has to change his tax rate, then you are saying that it will be up to a maximum of 100 rupees
per
transaction. If they do it on the total tax in an invoice, say some percentage of the total tax up to a maximum of 100, maybe that will be more workable. But how that gets captured in the return, that is something which more.
And the implications of the input tax credit also.
Yes, but it is basically for B2C, not the input
tax credit.
Oh, okay. It not be only for B2C.
B2C only, right? Right. So you would like to say a few words on this, that whether there is some kind of a study. All of us agree on this point that this is a desirable step which might be taken. But the point is that do we have some study apart from the issues for the GST network that it will complicate?
Not only GST network, I mean it is also a problem for all the taxpayers to customize the software. If you do it,
it will be.
But for you, done in a manner in which it is easy for them to apply that in their system software.
Right.
Correct. So, see, digitization and formalization of economy is a welcome step, and it is a step in that direction. So, at present, the mechanism is being worked out. Design complexity in terms of return, IT platform, etc. will be an issue after the policy decision gets taken. But the fact of incentivizing digital payment is something which cannot be really questioned or disputed. Now, whether the incentivization should happen in form of GST rate with a cap of 100 rupees or from income tax, or there should be a direct payment to the customer, or can there be any other method as well? So these are questions which essentially are matters of detail. I'm quite sure that when you have the GOM report, all these aspects would have got examined, and we will have a roadmap which can be successfully deployed.
Okay, so now we come down to the fourth point, and where the government of India has taken over the GST network. So jointly, of course, with the state. I mean, the
both
GST Council,
and state governments together have taken
the council has given this approval for, of course, and based on the GST revenue collection, etc. Both the government basically means the state and center both in GST. So, how good this news is for GST network? I mean, is it going to make some material change in terms of the taxpayer facilitation, etc.?
What are the impacts of this? What I can think of, because I've been part of GSTN for the last 3 years now. One thing is that a lot of attack was there on GSTN, saying that it is a private entity, though it was a government controlled entity and it was only for technical operational flexibility. It was a private entity. So that attack will go. It is now a fully government company with 50% share. It will be a government company with 50% share with central government and 50% with all the state governments. Now, as the finance minister has said, I mean, they have done this because GSTN was performing a state function. And that's why there was an attack, since it is performing a state function and it is a repository of all the data, critical data. It is controlling data. So people were raising concern that it should be a government company. And within the government now, the cooperation, the collaboration, there will be less insecurity for collaboration within different government agencies. What GSTN has shown, is that how through a technology platform, both the center and the state governments can collaborate and bring out such a massive reform,
right?
And which has been done fairly smoothly. If you look over the experience of other countries, in India we have had a very fairly, I mean, there was hiccups, but the transition has been fairly smooth, and both the center and state governments have responded very nimbly to the issues that have come and that have been raised by the taxpayers in the process of this implementation. So I don't think there will be much change, but only one thing is that the GSTN was having people from the markets which were recruited right from the start, and they have worked very hard during the last 3 years to make this implementation a success. So they are feeling insecure that in the government setup you don't have, they will be treated as contract employees. So I mean, the government has to come up, but government, if you look at the proposal, they said that GSTN will retain this flexibility of hiring people from market at market rates. So the original purpose why GSTN was made a private entity has been retained. It was made a private entity to have the flexibility to hire people at market rates. That will be there. Now they have to work out the modalities, how it has to be done. But it has to be done in a manner in which all the people, employees feel secure and contribute their best to achieving the difficult task that we are having, because this problem, the task of GSTN is, in my opinion, going to expand, because computerization is the key for this GST implementation. And what presently we are having is many functions are being replicated across governments, like say CBIC is replicating many functions. Now since it has become a government entity, maybe we will see a consolidation of all the computerization functions related to GST implementation in one entity. That may, and we all of us would like to have a very good company which takes care with agility all the problems that come up in this journey.
So Neeraj, how do you look at it? This news, of course, I mean, this is between government to government kind of transaction. I mean, it's not much, but from outside, I mean, do you welcome it, this kind of decision, or because as what is suggested, that the flexibility is going to be there in terms of hiring talent from the market and market rates, etc. Those things are going to be retained. So as a taxpayer, our wish is generally that the GST network should function well and the taxpayers' requirements are taken care of. How do you look at this decision of the government?
From taxpayers' concern, we don't have an issue unless and until the things are working well. And I think at the back of our mind, the government has some concerns on the security, data leakage and all that. So that could be the, why the government wanted to change the shareholding. Otherwise, I don't see any change, because there are other income tax and other things, PF and all that. They are also wholly owned by government. They are working fantastically. So I don't think any change from the taxpayer's point of view. As an end customer and a professional.
Sanjay, you look at this. How do you look at this?
I have only one observation. I think my observation is that they are the service provider to 30 governments. One is union government and 29 state governments.
Correct.
And UTs are managed by union government, so I'm putting them there in that bucket. And then there are about 8 to 9 million taxpayers. We all are good clients in that sense.
1 crore.
More than a crore.
So more than 1 crore taxpayers. I think for us, the ownership and the form really doesn't matter as long as the service levels remain same. So if in form A they are able to attract good set of people, and in the form, if the form changes to form B or the ownership changes to a B kind of structure, if the quality of people they are able to attract and the service that they deliver to, as I said, 30 governments and 1 crore taxpayers, if that remains the same, then I think we are indifferent to the ownership structure.
Okay. So now let me go to Mr. Sinha before we wrap up. That I mean, this decision of the government of taking over the GST network, does it also mean that I mean, if we look at last 6 months trend, and economic survey also came out with lots of data analysis, and the GST network data turning out to be such an insightful piece of information coming out of it and being made use of by the Fed formation, by the revenue authorities, even the transitional credit, for instance, that was shared by Honorable Minister and the Secretary, Revenue Secretary also, the kind of misuse, the data. So I mean, do you look at this in days to come, the GST network data, will be shared with income tax department, maybe tomorrow with SEBI, for instance, maybe other agencies, Provident Fund, for instance, now that has gone online, and to verification, matching, etc. 360-degree analysis and data analysis, ultimately that valuable insight for policy making. How do you look at this?
Well, these are things which will eventually happen, but at present one has to wait for a larger data sharing framework which is likely to emerge. In Aadhaar case, you would have seen that Supreme Court has set a commission which will give the data sharing framework for the country. Once that legal framework becomes clear, then these contours and questions can be replied. Tax administration, government departments will obviously be keen on exchanging data and the information which you have so that better governance emerges and all kinds of irregularities can be reduced. That remains the larger goal, but on specific point of nature of data exchange and what are the safeguards, to what extent data exchange can take place, these are matters of detail on which we still are in the process of both as a nation and a society forming and formulating the policy. It's a process of evolution, so I think the answer lies in future, maybe next 1-2 years.
Correct. So on this note, let me thank all my 4 guests, and very rightly suggested that the new format which has been welcomed, that the single page monthly return, where the facility of automatic reversal of credit, it has been done away with, and for 6 months period they are very hopeful that some of those challenges which may emerge tomorrow, even technologically, for instance, that can be worked out. Those details we will get to know later once the larger framework is out in public domain for a little more debate. And technology side, of course, this challenge will continue to be there. Some of the concerns which the GST network, the hard employees will have, perhaps the contractual employees, probably the government has already made it very clear. If you look at the finance minister's media briefing yesterday and all the government press releases, etc., that they are going to be retained at the same attractive terms and conditions. And the GST network, ultimately the taxpayers' data, the government concern for quite some time was that the confidentiality of the data must be honored, and it must be retained to such an extent that it doesn't become an issue, sensitive issue tomorrow. And apart from that, the taxpayers and government relationship in any case is fiduciary, so that had to be given due respect. And apart from the group of ministers which are going to be out with their own reports in 15 days time, we will get to know what are the mechanisms being suggested for mobilizing additional resources in days to come, and many more things perhaps will emerge for future data sharing framework, etc., etc. Ultimately, if it is within the domain of government, naturally the government can make use of all the data matching, 360-degree, etc., etc., all the data analytics for future tools for better governance, as Mr. Sinha rightly suggested. Thanking you all for watching TIOL Tube.
Thank you.